How's it going, everyone? It's Sam. In today's video, we have three main things that we have to cover. One, what's happening in the market. Two, the economy is starting to crumble. Then three, why you really need to have some amount of crypto right now. And showing what's happening behind the scenes that the government is doing, really showing, again, why there's so much value in something that is trustless. So we're going to go through all that. Hit subscribe underneath the video so you get future videos just like this. There's also a link down there to Margex in case you want to trade on leverage. I've been noticing some people have been making some pretty big bets on referrals from my account. So some people are making a lot of money, especially with crypto moving up right now. Definitely check that out, but only do that if you are an experienced trader. There's also a link down there to moomoo in case you want some free stocks, up to 15 free stocks when you fund your account. Now, the overall market is up a lot today. I mean, the Nasdaq's up 1.52%. Crypto's up at the time of this recording, but who knows if it's up when you see it, because it is moving back and forth between about 20,500 and 21,500. Not a huge range there, but right now, since we have seen so much stagnation over the last few months, or so much sideways movement, it seems pretty exciting. But remember, this is pretty small in the grand scheme of things. We have Bitcoin racing up over the last few hours, again from the mid 20,000 range up to where we've seen previous resistance. This has been a pretty heavy level of resistance right in here. I think once we break through this, we could see a nice big move, assuming we do break through it. The S&P 500, though, is facing resistance as well. Not quite yet. We're at 3,930, and right around 3,990 is where we've seen this trend line we've been rejected time after time at this trend line. So hopefully we can break through that. I think a lot of people would get bullish, and same thing with crypto. If we could break through a couple more key resistances like the 200-week moving average, which is up around 24,500, I think that would turn even more of the bears into bulls, but who knows what's going to happen. I think now is a good time to be looking long-term for crypto, and you shouldn't really care as much about the next few months or even the next year. It's really more of a long-term outlook. Now, we did get some big news in crypto here today. Crypto lender Genesis files for Chapter 11 bankruptcy. And we've been talking about this for a while, that it was bound to happen. The firm has estimated liabilities of 1 to 10 billion and assets in the same range, it says. I've heard from other sources that they had around $500 million in assets. So who knows what they actually have. And this is such a large range. They could have 10 billion of liabilities and 1 billion of assets and be in the whole 9 billion, which is insane. According to the filing, they're contemplating a dual track process, pursuing a sale, capital raise, or equitization transaction that would apparently enable the business to emerge under new ownership. The derivative spot trading, broker-dealer, and custody businesses of Genesis are not part of the Chapter 11 proceedings and will continue operations according to the firm. So they're starting to try to figure out who is owed money, how much money they can give them. DCG is kind of scrambling because there's still a lot of money that they owe, or Genesis owes, and even though they say that they haven't commingled funds, they're still trying to sell off some of their assets really quickly, like CoinDesk, like some of their cryptos. It seemed like they're trying to sell some of those on the open market a couple months ago. Cameron Winklevoss says, unless Barry and DCG come to their senses and make a fair offer to creditors, we will be filing a lawsuit against Barry and DCG immediately. This is after they talked about filing Chapter 11 bankruptcy. Hopefully this goes smoothly and some of these people can get their money back, but so far it seems like it was largely priced into the market. When this news came out, we actually started to move up, it seemed. So I think, again, just a lot of the bad news has been priced into the market, and while a lot of these things seem really scary, the fact is we have been through a lot. Some of the largest exchanges have been blowing up. Some of the largest hedge funds have been blowing up. A lot of the people that were using leverage or were just practicing terrible risk management are gone. So hopefully we can continue to build from here and continue to move up. With that in mind, though, we are seeing a lot of bad news from the macro. Some people might say this is good news. Google Alphabet is going to let go of 12,000 employees, which is about 6% of its workforce. This is coming after Microsoft and after Amazon also announced 5-figure layoffs earlier this week, and so many other big tech companies have announced similar layoffs over the last couple months. This continues to show that there are a lot of companies that are hurting right now, And they're really looking to trim some of the fat that's been at their business because a lot of these tech companies were hiring and overhiring, not really seeing some of the risk in that until recently. We also got existing home sales falling for the 11th straight month in December, hitting the slowest pace since November 2010. This is an annualized pace of 4.02 million units, which is 30% or 34% lower than it was in December of 2021. Obviously, the housing market's being hurt. Employers are getting hurt and employees as well because they're getting laid off. At the same time, credit card debt is racing up. We have 1.2 trillion basically in credit card debt, and personal savings rate is at 2.4%. This is after it went up to the 20s just a few years ago during COVID. So the consumer, the average household is having a harder and harder time, and interest rates on credit cards are going up. The average rate is around 19% right now. So a lot of people are waiting for the Fed to flip, and a lot of analysts are saying when they actually do flip, that might not be the best time for investors because that signals that they are having some massive economic problem that they have to switch and they have to start lowering rates or at least keep rates the same. And if we have that massive economic problem, that's not going to be good for the markets. However, it seems like a lot of the markets are already being hurt right now, or a lot of the economy is already being hurt. Consumers are having a tough time. Inflation, while coming down, is still much higher than it was a few years ago. No one can sell their homes for close to what they've been able to buy them for the last few years, and people are losing jobs. So again, just setting up for that scenario where the Fed does probably have to flip here relatively soon. They could go through a little bit more pain, really try to squash inflation, but at what cost, right? Now, we also have another massive problem, which is the U.S. national debt. It's over $31.5 trillion right now, which is 121.5% debt to GDP ratio. A crazy number, and it continues to go up. And because we've hit the debt ceiling, the Department of Treasury is altering investments into 2 government-run funds for retirees in a move that will give the Treasury scope to keep making federal payments while it's unable to boost the overall level of debt. So what are they doing exactly? Well, they are taking from specific funds, including the Civic Service Retirement and Disability Fund and the Postal Service Retiree Health Benefits Fund. Now, what they're doing is they're basically trying to increase the debt limit, but in the meantime, they're drawing from some of these funds, and the funds will be made whole after they increase their debt limit. Now, I don't know about you, but if I was part of one of these funds, if I was a retiree that had to use this money, I would not feel comfortable with the government just coming in and saying, hey, I'll give you this back. I'll give you your money back, your retirement money back after we've fixed our problem, right? They're basically taking the money from them and then saying that we'll give you an IOU in the meantime, and then we'll make up for it later. I think this is another reason why it makes sense to have some kind of insurance policy with Bitcoin specifically. Bitcoin can be thought of as 2 different things, I think. An investment vehicle or an insurance fund. Basically, in case the US goes down, or in case currencies collapse, or in case we get inflated and continue to get inflated, it can be a hedge against that kind of fiat inflation or the fall of governments and that kind of thing. So I would consider your Bitcoin both of those things. I think you can trade it. If it gets overvalued at the time, you can trade it for fiat, and it probably is a great trade. If it gets undervalued, you can buy it as an investment. Otherwise, you can still have it as insurance against corrupt entities and governments. And that doesn't mean that every single cryptocurrency is an insurance fund. Some are just scams, some are going to zero. But I think this is a good time to be, thinking about the next 5 to 10 years and the way that macro is going, not just what's happening in crypto this month. Now, of course, do your own due diligence. Let me know your thoughts on this underneath the video. Let me know if you think you need to buy some crypto right now for insurance, and I will see you in the next video. Bye.